time for tuning in to my 2905th edition of Short-Term Trading Live with Oscar Carboni. Traders, as we know, trading is risky. Never trade without protective stops. Put those in first before you ever enter into a live position. You'll live a lot longer in this business if you do that. So, what's on the board for trading on May 2nd, 2025? First is, it's May. Thank you, God. We're out of April. No more losing. We already had a winning day in May. Thank you, May. Thank you, OMNI. Woo! Getting out of April is good. We've already done the disclaimer, David. You weren't listening to that, huh? Why, David's got a sign up going, don't forget your disclaimer, Oscar. But we already did that, didn't we? All right, that's talking about stops. So, some topics on the board. One of the first things I want to bring up is this. Traders, I have been guiding you properly since the start of this drop, before the tariffs even were mentioned. We started the drop way up in the 62.25 area in S&P. And because Powell stopped lowering rates, and that started the down move. Then Trump came out with tariffs, and that finished off the down move. And we've dropped, I don't know, almost 1,400 points from the top to the bottom. Well, here's what's happened since. We went right down to the area projected for the market to get to, held, and since then the market's gained legs, the E-mini S&P, and here's the important thing. It's rallied up past the 50% retracement level so far. Now, many bearish fund managers look for a market to drop, do the 50% retracement, and drop further. We've gotten about 100 points past that, but we literally need to go further because that's still close enough to call it a 50% retracement. If you're following the June E-mini S&P, 50% retracement is 55.28. From the high to the low of the drop to where we are now, a 50% retracement is 55.28. We're higher than that by over 100 points. We need S&P to just continue higher, and then the thought of 50% retracement and back down, that's out of the traders' heads too, and away we can continue with the upside. Now, big news is coming out Friday morning, tomorrow morning, if you're watching this video Thursday night. Here's the beauty of this. Unemployment rate figures come out. Non-farm payroll figures come out. U.S. employment rate comes out. Regarding employment figures, all news is going to be good news. Here's why. If the report comes out really bad, that gives Powell a chance to say, now I can lower rates, and it's got nothing to do with political pressure because it's got to do with employment, and that's one of the Fed's mandates. The second thing is this. So if it's bad news, it's good news because Powell has to then, we know in the background, Powell's going to say, hey, now I can lower rates. If it's good news, well, good reports are good reports. Good news is good news. So tomorrow's report, even if the market reacts, is going to be good news in the end no matter what. Remember, too much unemployment, Fed has to lower rates. Good news. No unemployment that we're worried about, Fed doesn't have to lower rates. Good news. So it's good news no matter what happens tomorrow. At least that's how traders should handle it. So now let's go to the board. So far, E-mini S&P has found its legs since the tariff drop and has bested the 50% retracement zone of 55.28. Congratulations, S&P. That's about the spot bearish funds look for and plow back in, and luckily we're 100 points past that so far. Number 2 on the board, crude oil overall is still getting cheaper. It had an update today, but it is a lot cheaper than it was a month ago, and that is good for the economy. Number 3 on the board, gold is about to get hit. In a live session I showed about yesterday or the day before, I showed everybody the gold chart, and I said, look, in a descending wedge, that means gold's going to get hit, and gold got hit today. I think gold gets hit again on Friday, and I will show you the charts. However, Bitcoin looks much better than gold does. Bitcoin looks like it wants to stay up here, even if it falters a little, it wants to head higher, and gold looks like it needs to retrace. I've got wonderful charts to show you for each and every one of these. We're going to look at them in just a moment. I want to remind you I've got an OMNI camp. It's happening in 1 month from now. You've got to hurry up. We've got 4 weeks left. If you would like to join me here live in my home office, I will work with you all day Friday, all day Saturday, all day Sunday, all day Monday, send you home Tuesday morning with a brand new laptop filled with all the information we've learned together. Your lodging and your meals are included in this particular OMNI-Camp. In fact, the next camp, I don't think that's included any further. So if you want your meals and lodging included, join this camp. It happens at the end of May, May 29th through June 2nd. Just go to OMNIBootcamp.com, fill out those applications. I've got a couple of open seats. I will interview you and see if you qualify. This is happening now. Markets are going crazy. The OMNI is fantastic. It's a great thing for you to learn. If you're looking for freedom, how to call these markets properly yourselves, this is your moment. OMNIBootcamp.com. Make sure you fill out those applications. All right, so the traders that come out to OMNI Bootcamp always have wonderful things to say. They really do. It really changes their lives. Take a look at this quick clip, and after that, we'll look at charts together. Humor me. Check this out.
Feeling overwhelmed by the complexities of trading, lost amidst the market's ups and downs? You're not alone. But there's a solution: OMNI-Camp. We're here to equip traders like you with the knowledge and confidence to thrive. Join Oscar Carboni for an immersive 4-day experience designed to transform your approach to trading. With over 42 years of Wall Street expertise, Oscar has crafted OMNI-Camp to cut through the noise and arm you with the tools for success.
Traders, you've seen that. I promise you it'll help you come out to camp. I will help you. Go to OMNIBootcamp.com, fill out those apps, and now I want you to say this with me, and then we're going to look at some great charts. Say this with me, kids. You know what I'm about to say, right? What keeps your emotions out of trading? Place your stop first. Then say this to yourselves over and over again, and by now you should know what that is. Stops are in. Emotions are out. Now, traders, listen, a rule that we use here at the OMNI Trading Academy is this: trade what the chart shows you and not what you think. Now, let's go look at some charts. Traders, if you recall, we've been showing you this chart since the gap was formed. We had a gap in the Dow, the S&P, the NASDAQ, the Russell. Well, the Dow came down and filled its gap, 100% filled. That is completely filled, and has rallied out since, and now we're up here. And guess what? We're already getting past all the damage down there. Okay, gap filled. E-mini S&P, because the Dow filled its gap and E-mini S&P left a dot, that's considered filled. The gap is considered visually filled. The wonderful thing about this is I showed that to you the day it was filled and told you this very same thing. That's visually filled. Now we can go up. And many people wrote to me on my YouTube and said a lot of stuff, but a lot of them really don't know analysis so well, I have to tell you. That's filled, as you see. I wasn't wrong about that. We've been rallying up ever since. Russell 2000, the gap, filled just about, left a little teeny spot that's close enough to be called filled. And if you ask me, I think this is a bull flag building. I think this is starting to look smart again, but you know that because I've already done videos a while back telling you the bottom is in. I caught a lot of heat for those videos, but guess what, kids? Those videos came out here. We've been going up since. So you might give me heat, but you should learn how to read a chart first. All right, next. E-mini S&P, let's go back and let's take a look at this. We have dropped from the 62.25 area all the way down here, got itself down to about 48.32. When you do the math, right about here is your 50% retracement. Right about there is your 50% retracement. So we've gotten past that, and we're here right now. We need to go further. You need Friday to look like this. If Friday looks like this, that's going to be a problem, kids. We need to get away from this now. We hit the 50% mark. That's down here, right? We need to get past it. We have already. This is an actual bar. We need this fictitious bar to show up tomorrow, not that one. That one would give us a bit of a problem. So, Everybody, let's get together tomorrow, hold hands, and we'll hum and think bullish thoughts. How's that? We need to go up. Next, E-mini weekly, where this all began, traders. If you recall, we were sitting right about here, and I said, look, we're probably going to have a drop. Don't get nervous. We could drop somewhere between 49.75 and 47.75. If so, Wall Street will come in and buy. They will support it. Please stay calm. Do not bail out of stocks. Does anyone remember me giving you these videos? And I told you I grew up on Wall Street. I promise you, I know what they're going to look for. Don't bail out when we get there. Well, we got there exactly. I mean, we got to 48.32. It's right between the two numbers. Since then, we've been going up, up, up. We had the holiday reversal week, just this one. Went down for 3 days during that week and ended up going back up. We've been going up ever since. This weekly chart looks fantastic since the day it put those lows in. Nothing has changed yet. If analysis decides to change, I'll let you know. But what we called, based on charting and what's happened, has been exactly what we were expecting. And we should expect it to continue further unless something changes. Now you've got Bitcoin. I love clapping for Bitcoin when it's going up. We gave out 2 targets when Bitcoin was here. We gave out 2 targets. Target number 1, 94.2. That's been hit. Thank you very much. We gave out target number 2 of 99,000. Then we upgraded the target to 102. Well, 99 basically was just about hit already on Thursday. And we do expect 102 to be seen shortly. And you're in some kind of an F flag, which is very bullish usually for Bitcoin. So as long as we stay inside of that F flag, we expect to meet that 102 target. Bitcoin looking like a buy the dips market. Now, crude oil. One of the things that's going to help E-mini S&P and the stock market continue to gain legs is the price of energy just keeps dropping. Right? We're all the way here now. We expect to go all the way down to 47.50. That wouldn't even fit on the chart if we started to drop. And that is absolutely going to continue. Now, we had an up day in crude today on Thursday, but this is a weekly chart. Overall, this is just going down. Don't worry about a one-day spurt up. That helps the economy. And now we're going out to gold traders in a live session. I had a bunch of traders from YouTube tuning in. I said, look, kids, a descending wedge. That should produce a down move. Stop getting worried about gold, not just because of the descending wedge, but this channel goes really far back, and we are now below the channel. We're building that wedge mostly below the channel, right? Top and bottom is here. It goes so far back you can't even see the connections, but that channel connects out from far back. So we built that descending wedge. This is where it was, and this is what happened so far, right out of the wedge. And I'm telling you right now, if we can get short gold tonight, we're taking another short in gold. Keep your eyes on that bad boy, sell the rallies. And dollar index would help the gold go down. Why? Because the dollar index, after all this down move, has put in an inverted head and shoulders, which is a bullish signal. It is above this trend line that's connected all the way from the highs back here where you can't see. Continuing. We're above it now. We're sitting here with an inverted head and shoulders. That's bullish. If dollar's bullish, it puts weight on gold. What else? The exact opposite. Look at euro. Exact opposite. Euro had its run, went up above the channel, the same sort of channel you've seen the dollar in, created an upright head and shoulders, left shoulder, head, right shoulder. Signal is for the downside now. Maybe all the way down to here, we'll see. Euro currency looking like gold versus the dollar. And then a little treat that I also showed my OMNIACs 2 days ago was the coffee market. Are there any coffee traders out there? This is a testament to just how well technical analysis works. Look at this double top that was put in. The first thing the market does after hitting the double top, spend the whole rest of the day going down. And that was the day the double top got put in. And here's where we're sitting now. So that double top is absolutely positively working. It's heading down right now. Check that out. Coffee fans, while the dollar looks bullish, there's probably more downside coming. I hope that helps. Make sure you like, subscribe, and share these videos all over the internet. Do me a big favor, do that right now, and leave your comments below because all of you know I answer every single comment. Write a comment, you'll hear from me personally. Thank you so much for tuning in. Good luck trading out there.